So before I get into this little video here today about what it's really about, which is the Federal Reserve rate, are they going to raise rates today, or are they not? What's it going to be? What's it gonna be? Now, do you know that, or did you know that the big banks are cutting employees by the tens of thousands, both, and there's more, I'm sure, but I just read HSBC, I think, and Deutsche Bank, I believe, have cut each tens of thousands of employees, fired pink slips. So that means that's your sign that says, okay, things aren't going to be too pretty for the banks for a while. And if we had these 0% interest rates all these years, and the banks have been making money left and right, doing everything that they could do, and now all of a sudden, when things at this moment of time should be okay, recovery, everything's good, supposedly, why are you cutting employees en masse? Because they do this in advance of the real issues that we're all going to say, oh, well, that's why they cut them. One of those issues, in my opinion, being the stock market crashing. And if the stock market crashes, those banks are going to be having to cut fat like a whole bunch of other places. So if they're doing this in advance, which they are, because they've already reported it in the news that they are cutting those employees. Done deal. And we have a Federal Reserve meeting today in which, are they raising rates or not? And if they raise rates, the stock markets, which they just said a minute ago, last 15 minutes Chinese markets were open, they've absolutely tanked heavy duty. And if the Federal Reserve understands the market's going down anyways, they may just go ahead and do that. Now, if I were in charge of the Fed, and I knew things that most people didn't know, I would be saying, guys, can't we let the markets get hammered first before I have to come out and make this news announcement that we're raising rates? Because if we don't, and I come out and say, hey, we're raising rates, and then the market crashes, and all the news is going to say, well, it's because the Fed raised the rates. So can't we have the market start crashing first before I have to come out and make that statement? That way I can say, well, we had to raise rates anyways, look at the market. It's going down anyways, blah, blah, blah. So be it. So this is tricky because honestly, I don't think anyone really knows. I mean, I know that even Peter Schiff was saying, look, the Federal Reserve's going to do the only thing they can do. Like we've been saying all these years, like he has been saying all these years too, they will QE and QE and QE. Quantitative easing, quantitative easing, quantitative easing. They will just keep printing. However, the bottom line is that they can't just keep doing that. So, I think they're going to ultimately raise rates. They have to. The question is, are we about to find out today that they decided, regardless of the market not quite crashing all the way yet, let's just raise the rates now, and then all of a sudden the market starts crashing. And then they essentially become the fall guy. And so what? They did it in the 80s. They jacked rates up 18, 19, 20%. It was ridiculous. My dad was telling me. I was just a wee little boy then. And he said, yeah, now you know why houses were $20,000 and $30,000, and even in San Diego, California, where we lived at the time. Which actually was till about 81, but for me. But, and I've already mentioned this many times, you can't have $150,000, $200,000, $250,000, $300,000 houses at 3-4% interest rates, and then all of a sudden rates get jacked way up, and those houses stay at those values. It's not possible because it's all based on what a person can afford in a monthly payment. And if rates get jacked up, you can't afford the same house you could afford just the day before when rates were better. It's that simple. So what has to happen? The price of the house has to come down. So your $250,000 house may have to come down to $175,000 or $150,000 or $100,000. Depends on how crazy the interest rates end up rising. And even if the Fed comes out today and says, "Yeah, we're raising rates," it'll be a little teeny tiny rate hike more than likely. And then some other time they'll come out, "Okay, we're going to raise it a little bit more." Okay, yep, we're going to raise it a little bit more. I mean, I don't know. It's so hard to tell what they're going to actually do if you're not behind those same closed doors, knowing what the real goal is. And the best we've got really is Lindsey Williams. And even he said, you know, all this buying back of our debt that the Fed's doing, these bonds and stuff, if it wasn't for the Fed, we would be literally the country destitute and on the streets because of all the buyback they've been doing. So they just they have to print more money somehow to pay for the bonds they have to buy back. So what happens when they don't have the money to buy the bonds back? As Lindsey Williams said, he was told they were only going to be able to buy these bonds back for a certain amount of time. They wouldn't just continue this forever. They would get to a point where they just stop, and they can't. So, the Fed's long-awaited decision day arrives, and Chinese stock markets wipe out in the last 15 minutes, courtesy of Zero Hedge. The long-awaited date is finally here, by which we, of course, mean the day when nobody has any idea what the Fed will do, the Fed included. Putting today in perspective, there have been just about 700 rate cuts globally in the 3,367 days since the last Fed rate hike back in June 29, 2006. While the central banks have bought $15 trillion in assets, and vast portions of the world are now in negative interest rate territory. As we noted yesterday, while the Fed funds market implies a 32% probability of a rate hike one day ahead of the decision, which compares to 70% in 1994, 76% in 1999, and 92% in 2004, investors are even more torn, with 57% of respondents in an RBS survey saying the Fed should hike today, but only 42% expecting the Fed will announce a rate hike at 2 p.m. Of the 113 estimates on Bloomberg, 59 are calling for the Fed to stay put and 51 are calling for a 25 basis point hike, while the remaining 3 estimates calling for a 12.5 basis point move. The Fed itself is not sure what to do. According to many, a hawkish move would be not to hike but layer the statement with many caveats how strong the economy is even as the Fed again chickens out, while the dovish thing would be a one-and-done rate hike with the Fed potentially unleashing a recession-inducing curve inversion, which is what I was saying a minute ago. Though hike it just a little bit, wait a little bit more, hike it a little bit more again, hike it a little bit more again, later on down the road as we go. Then there's the problem with the Fed's rate hike machinery. The reverse repo IOER corridor has never actually been tried in practice, only in a very specific in vitro setting. As such, a turbulent time will the Fed risk crushing its only possible and very much theoretical rate hike mechanism. And perhaps, as importantly, with China undergoing currency devaluation and a massive capital outflow, will the Fed risk blowing up the entire emerging market complex even more? Probably. And finally, unlike any other rate hike in the past, there is the algorithms to contend with. In the 2004 through 2006 rate hike cycle, high-frequency trades barely existed. This time, the Fed's reaction function has to take into consideration momentum ignition, spoofing, quote churning, quote stuffing too, and countless other headline-driven market reactions. So all eyes on the Fed's website at 2 p.m., if not perhaps for Goldman's, the firm that runs the Fed, has spoken, and it see at least 4 more weeks of 0% interest rates, if not a zero-bound winter stretching well into 2016. So, should the Fed hike the rates, the biggest question is not what stocks or the short end of the Treasury curve do, but what the reaction of the long bond is. After the usual initial knee-jerk reaction, if the long end concurs with the Fed's view of economic recovery, then banks, cyclicals, and stock values will receive a bid. Asset allocation toward strong dollar and Fed tightening plays will harden, with the exception that value will likely outperform growth. If the long end rallies, signaling a policy mistake, then crash, volatility, gold, and defensive growth will be the way to go. Also, a quiet exit stage left may be prudent at this moment. One thing is certain, or the one thing that is certain, is that while the Fed fiddles, China's market manipulators continue to burn in ever more spectacular fashion. And while yesterday the which is Shanghai Composite, entertained Chinese market watchers with a tremendous surge in the last hour of trading, today it was the opposite. When the Shanghai Composite Index fell 2.1% to close at session's low at 3,086, sinking in the final 15 minutes after gaining as much as 1.7 on light volume. And here's the number that it fell to. Down by the 65.666. You see, the club absolutely loves to put their little numbers in front of each other. If you remember the market crashing in 2007 or 2008, and we had the one-day biggest drop and this and that, and whatever that number was that day, which I don't remember off the top of my head, but it was like 4 sevens or 3.777 or something. See, and as we've come to notice or come to learn, there's been a lot of hidden talk, whatever, amongst the elites, giving their little speeches and whatnot about the number 7. Remember Christine Lagarde? Let's not forget about her and her number 7 speech. So it was like back then, even they're telling each other, lucky 7, 777. Hey, hint, everybody, 777. Ding dong, bing bong. Oh yeah, that's right. When's the seventh Shemitah cycle? So 7 years of 7, 49 years. That's right now. Literally right now. September 2015. It's the 7th 7-year cycle. It's a very important one. And yet, what's today's date? Where are we at? 17th. We are just a hair past the halfway point of September, and so far, nothing real bad seems to be happening. Although we had a massive earthquake off the coast of Chile last night with tsunamis, and I haven't checked to see how devastating they were just yet. I did see a video last night of someone was up a street somewhere, and water was flooding in. I mean, not enough to where they were like running for their life, but it was, some moving water for sure. Clearly in a place it didn't belong, because it was up and down. It was up a street, and there's businesses everywhere, and there's floodwaters coming in. So clearly there's some impact there. But we're not talking about Shemitah, market crash, the fall of countries, the rise of countries, big events that have happened during this cycle, especially the 7th 7-year cycle. Those seem to produce the big events, the really big events. And we're on one right now. It's this month. Technically speaking, the Shemitah was a few days ago. So, as Jonathan Kahn had said, look, on all my research, it doesn't have to be precisely on the Shemitah. It can happen slightly before, it can happen slightly after. And that's what his history shows. He says, but most of the time, it's on the money. So, you got all these TV shows and movies and people of high, stature in society, former prime ministers and advisors and all that stuff, pretty much saying things like, hey guys, get ready for potential rough times. And again, why is the advisor to Gordon Brown coming out and saying regarding the crash, 3 things you need to do essentially for the upcoming crash? He didn't just say do these 3 things because I feel like telling you to do them, just to be a good idea to have just in case of anything. He said about this crash, it's going to be 20 times worse than 2008. So my opinion, how are you going to have something even multiples of what was 2008? Maybe it's 4 times as bad as 2008, right? That still would be absolutely devastating. You want to say 20 times? Who cares? Point being, multiples on the magnitude of what was 2008. Multiples of magnitude greater. Do you think, with that kind of outlook, they're going to stretch this collapse out years, have a nice slow collapse? How can you have something that devastating take way, way longer? Because also in his speech he said, well, he saved the day by, Gordon Brown did, by nationalizing the banks. Had he not done that, right, it would have been it would just been terrible. The world would have ended, oh my God. And it didn't. So if this time is worse, you've already nationalized the banks, right? Yeah. You can't re-nationalize the banks, correct? Well, yeah, we can. We already did it. So how do you deal with it this time? And is there a little bit more debt in the world, or a lot more debt since 2008? How about we look at America? Just America. We had $9 trillion in debt in 2008 and 9. Obama takes office, and while he's fiddling around walking into the White House and Bush is walking out, we stealthily bumped the debt ceiling up like 2 trillion or so, 10 point something, whatever it was, trillion, then it was 12 trillion, then we got to bump it up to 14, 16, 18, we're at 18, and guess what we're about to talk about here shortly? The debt ceiling has already been maxed out again. We need to raise the debt ceiling again. And is that how this is going to just go? Everyone's just going to keep raising the debt ceiling and everything's fine. The market's not going to crash like we thought, and you doomers got it wrong. Ain't a chance in hell we got it wrong. The only thing none of us could sit here and say precisely is, oh, I know exactly on such and such day because I'm an insider, or I know someone that knows somebody in the Fed, or and I know the date. No, that's not possible to know, not from any of us. What we know is what's going to happen. We know the markets are going to crash, absolutely. You've already got a taste of it. That started last month. Dow Jones in the 18,000s is now in the 16,000s, struggling to go anywhere. Even though we can still fluff our market up, and we have been. Down 1,000 points, back up, green, back down 200 points. I mean, these wild swings in a day's trading. And let's not forget, I've mentioned this so many times, but I know people forget. And there's so much going on right now, it's easy to be preoccupied with what's going on and kind of forget about some of the important things that are going to prove that this crash is coming. It's going to be here soon. And yes, you heard me say it a million times in a row, gold and silver will be reacting to it in a good way. The CME group added the circuit breakers for gold and silver back in November 2014. I believe it was November. End of the year, I know that. They've never done that in all of the entirety of the COMEX being around, which sets the price on all commodities, including gold and silver. Why would they do that? Because they don't want gold and silver rising exponentially. They have to cap it and slow it down. If they cared about you and me, they would have done that move a long time ago when silver and gold were $1,900 gold, $50 silver, 2011. We don't want you sheep to get slaughtered so bad, so we're going to have a managed retreat. Nope, they let the floodgates out. Silver was dropping massively in a day. Same with gold. Next day, same thing. Next day, same thing. I mean, it was brutal. So now all of a sudden you guys are putting these circuit breakers in, none of which have even almost kind of been triggered. Why? Because they're waiting to use them. They know they're going to kick in when the economies implode, when the markets implode, by their controlled demolition, so to speak. I'm telling you now, all these years you've waited and waited patiently, gold and silver, and you look out there and they slam it down some more, and man, it's hard to stomach if you get emotional about it. And it's hard not to when you have something that you paid money for and it's not looking pretty. Your instinct is like, hey, I'm on fire, bozo, get out of the fire. Sell it, get rid of it. Take your losses now, get out of the fire. That's what they want you to do. But if you look at any of the hard numbers in very recent times, even from the COMEX itself, and they're moving eligible to register, then taking those numbers, but back to eligible, and eligible is really gold and silver that they have stored for somebody. And then I believe the registered, I want to say, is what can be delivered, good delivery bars, etc. Oh, you got a demand delivery, we got you covered. We'll get it from the register. And we're seeing little shenanigans, especially with JP Morgan, where the exact amount comes out of one side, which is eligible, to registered. They put these fires out, so to speak, and then all of a sudden, somehow the number goes right back to eligible again. Well, if it went back to eligible, then where did the other one go? Registered. It went out to a customer or someone demanding delivery. And then you see these huge withdrawals out of the SLV inventories. These aren't just normal things. These people are scrambling for metals. Real physical metal, gold and silver. And they're robbing Peter to pay Paul, so to speak, to do this. And they know their days are numbered. And they know because they are in the know, and they're the ones doing it, and they know exactly how they're getting their gold, what's left, what's not left, how are we getting it over here, etc. And they're going to time all of this with this collapse. And again, they know the price of gold and silver is going to explode. That's why they had those circuit breakers installed last year in advance. And I'm going to tell you, I don't know if it's even going to matter. Because once the fourth circuit breaker triggers in a day, from what I read and what I remember, there's no more circuit breakers that will trigger. It's going to go up or down to wherever it's going to go. So all we could do is sit back and wait. We are in September. We've been waiting for this damn month for a while now. This month and this year. There is no other date. There is no, oh, well, did you know next year is a special elitist, gathering of the moon and stars and blood moons? Nope. It is all this month and next month, September, October, like Lindsay said. September, October time frame. Get your stuff in order before September 15th, he said. That doesn't mean, and I never thought it meant, oh, well, it's going to be on like Donkey Kong on exactly this September 15th. Nobody would say, get this stuff done by this date. If you really knew the date, you would tell people in advance of that date, get it before that date. Like 2-3 weeks, a month, whatever. and I'll give them that date. That way people who procrastinate stuff, you'll have your stuff way in advance. No one's going to tell you to get prepared on the exact date, like by that exact date, if he really knows. And again, he never gave a specific date other than, get your stuff together by September 15th. The fact that he left the country and went to Mexico for health purposes right in this time is interesting. So he clearly believes what his elitist friends tell him, and I see no reason why he shouldn't. They've been spot on with everything they've told him. So we can just kind of wait and see what happens, I guess. We're in September, and look at the news. Look at everything you're hearing about right now. And to think, this is like nothing. The party really hasn't even got started. People just barely started showing up to the party. Not even started yet. We got a lot more to come. Take care.